Welcome to the Knakal News Network. The Knakal News Network is brought to you by the Knakal Group, Cushman and Wakefield's #1 investment sales team.
Hi, I'm Jon Hageman, Executive Managing Director at Cushman and Wakefield. Welcome to the Knakal News Network. Today we're here with Bob Knakal, Chairman of New York Investment Sales, and we're going to talk about the year-end 2016 results of the investment sales market. Bob, now that the numbers are in from 2016, tell us what they said.
Well, Hags, the numbers for the market were a little challenging in 2016. Coming into the year, we were expecting sales volume to be down a little bit, and we were also expecting values to end the year below where they were. Our predictions were partially correct, partially not correct, but volume is where the big change was in 2016 versus 2015.
Why do you think that was the case, that volume was down as much as it was?
Well, I think part of it was that we had such a great 2014 and 2015. In 2014, we had an all-time record, 5,534 buildings were sold. That was an all-time record by more than 10%. And in 2015, we had $77.1 billion of investment sales activity. That was the highest volume ever. In those two metrics, we've never had two record years in a row. By the beginning of the fourth quarter of 2015, we started to feel some softness in the land market. Also, the hotel market started to feel some headwinds. Those are the two product segments that always feel a change in the market first. So we kind of sensed that going into 2016, there was going to be a pullback. And sure enough, with respect to the volume of sales from a dollar volume perspective, dollar volume was down 25% in 2016. We finished the year at about $58 billion of sales volume. And with respect to the number of properties sold, that volume went down by 16%. In 2016, there were 4,360 properties sold, which again was down significantly from 2015. And that metric was down about 20% from the record that we had in 2014. So sales volumes definitely were pulling back, not quite as much as we expected in the number of properties sold, but dollar volume was down about where we expected.
Talked about number of properties sold and total volume, but what about property values over the year?
Well, as coming into the year, we expected value to end the year lower than it started the year. And if we look at 2016 in total, average price per square foot hit $534 per square foot. That was an all-time record for the city, and that value was up 9% over where we were in 2015. So by all measures, that looked good. But the thing that was really perplexing about that is that we had downward pressure on volumes. We had fundamentals that had downward pressure on them. We saw reductions in residential rental rents, the rent levels within the retail sector. How can values be going up? That didn't make any sense to us. So we looked into the numbers a little more closely. It seemed like citywide they were down slightly over the quarter-over-quarter analysis, but values seemed to hold up in the outer boroughs a little bit better than they held up in the Manhattan submarket.
So Bob, would you then say that we are in a downturn? And if that is the case, then how much further down do you think we could go?
Well, I think I would say that the market is correcting, it's adjusting. I think that the extraordinarily low interest rate environment that we've been in for a long time really fueled pricing. But to the extent that we have advantageous changes in tax reform, that could help soften the landing a little bit of where we're headed. Foreign demand still seems to be very, very strong. There's a ton of foreign capital coming into the market, as you know. So we're expecting 2017 to not be so bad, but probably we'll see more of an adjustment down towards a normal market condition. In conclusion, in 2016, we saw both dollar volume and the number of properties sold down significantly from 2015 levels. Even in the face of falling rents and increased upward pressure on interest rates, property values hit an all-time record in 2016. In 2017, we expect dollar volume and number of properties sold to be down. Values will also drop, but we don't expect that drop to be significant given the potential of tax reform.
Thank you for joining us today. Tune in next week for another episode of the Knakal News Network.